Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar ETF Conference. I'm here with Steve Sachs, head of capital markets for Goldman Sachs. Steve, great seeing you.
Tom, always good to see you.
So here we are, your one-year anniversary of Goldman Sachs ETFs. Not a bad start. Over $2 billion already?
Yeah, it's actually been a great start for our first year. So we've got about $2.5 billion across the entire active beta product lineup. We've got a little over $1 billion in our flagship product, GSLC, which is the US large cap product. We've got 3 of the top 10 fastest growing ETFs for the last 12 months, including the #1 and #2 spot with our US large cap and our emerging markets fund. So it really has been a great start for us.
So obviously Goldman Sachs, great brand, great management. You're getting this kind of smart beta strategy with all the Goldman Sachs brain power behind it. And obviously the numbers speak for themselves. What is it about smart beta, and especially multi-factor strategies, that's so appealing today?
Yeah, I think there's a number of things, Tom, and I think for us in particular, right, you and I have talked before, multi-factor strategy investing is not new for Goldman Sachs, right? This is something that we've been doing for decades inside our firm. ETF business is new for us. It was really just marrying the two, the wrapper, the delivery vehicle that investors and particularly advisors want, along with activator or multi-factor stock selection. We really think that given the market environment, low single-digit returns, right, lower volatility, advisors looking to allocate to their portfolios in a smarter way and help manage their clients' money in a smarter way. It's one of the reasons that we think smart beta in general, and particularly the multi-factor approaches, have done so well over the last few years.
Yeah. So are you talking to your institutional clients and they're giving you ideas on things that they might be looking for? Do you factor that into the way you develop your product lineup?
We do. We listen to all of our clients, institutional as well as the advisor community, right? And that's no different than the ETF industry and the asset management industry as a whole, right? You've got to listen to your clients and understand what they want and need. And our most recent product launch, actually just listed today on the NYSE, which is the Goldman Sachs Treasury Access 0 to 1 year Treasury ETF, is a direct result of conversations we were having with institutional clients. There's been a ton of change in regulation in the money market space, as you know. Lots of changes in the US Treasury market that most folks aren't really truly aware of.
Yeah.
Advisors as well as institutions are rethinking how they allocate to cash. This particular fund, GBIL, was a direct response to that particular feedback they'd received both institutionally as well as from the advisor
basically
community.
money market in an ETF form.
Yeah, money market in an ETF form. It's short-term treasury, 1 year part of the curve, about a 5-month duration, about a 32 basis point yield. But the idea is, right, it's in an ETF wrapper. It's got all of the transparency, liquidity, and ease of use from the ETF perspective.
$3 trillion market, got to be some traction there for you.
Yeah, it's a big market for us in general. Goldman manages over $350 billion in our liquidity management program, so it's actually a core skill of what we do. Much like we've talked about before, multi-factor stock selection, fixed income, cash management, these are all core skills of Goldman Sachs, and it's really where we're focusing the ETF
Well,
business.
congratulations on a great year. Looking forward to seeing how the next year goes, Steve.
Thank you, Tom.